The stock market just made some people incredibly wealthy. While everyone else was sleeping, a specific group of USA top stocks surged by triple digits. And if you miss what's happening right now, you might regret it for the next decade. Stay with me because what I'm about to reveal could change everything about how you invest in American stocks. Beyond the noise, find your clarity. This is smart money sense. Look, I get it. You open your phone, you see headlines screaming about market crashes, inflation fears, and economic uncertainty. Everyone's got an opinion. Everyone's got a hot take. But here's what they're not telling you. While the headlines create panic, smart investors are quietly building wealth with the right USA top stocks. And today I'm pulling back the curtain on exactly which American stocks are dominating the market and why. Now, before we dive deep, I need you to do something for me. If you believe in making smarter financial decisions, hit that subscribe button right now, because this channel is all about cutting through the noise and giving you clarity on your money. And trust me, after watching this video, you'll want to catch every single insight we drop. So subscribe, hit that notification bell, and let's get into it. Here's what's actually happening in the US stock market right now. As of October 2025, the S&P 500 has delivered an impressive 13.72% return year-to-date. That's not just good, that's exceptional. The market has hit 28 new record highs this year alone. But here's the kicker. This performance isn't evenly distributed. A small group of USA top stocks is driving the majority of these gains. Let me break down the current landscape. The American stock market is worth over $50 trillion, making it the largest equity market on the planet. But there's massive concentration at the top. The top 10 companies now represent 34% of the entire S&P 500. Think about that. 10 companies control more than a third of the market. This concentration presents both incredible opportunities and significant risks that you need to understand. Let's talk about the giants first. NVIDIA leads the pack with a market cap of $4.46 trillion. Microsoft sits at $3.8 trillion. Apple at $3.64 trillion. These aren't just companies, they're economic powerhouses that generate more revenue than entire countries. And they're all USA top stocks that have created generational wealth for early investors. But here's where it gets interesting. While everyone's focused on these mega-cap technology stocks, there are other sectors making serious moves. The financial sector, for instance, has delivered 26.1% returns over the trailing 12 months. That's actually outperforming many technology stocks. Healthcare stocks are providing defensive value while showing selective strength. And there are hidden gems in the specialty retail and financial services sectors that most investors are completely ignoring. Now, I want to pause here and ask you something. Are you getting value from this breakdown? Because if you are, do me a favor. Hit that like button right now. It helps this video reach more people who need this information. And drop a comment below telling me which USA top stocks you're watching. I read every single comment, and your insights help shape future videos. Plus, we've got so much more to cover, so stay with me. Let's dive into the technology sector because this is where the real action is happening. Technology stocks comprise 31.7% of the S&P 500 by weight. That's nearly a third of the entire market. And for good reason. These companies are driving artificial intelligence adoption, cloud computing expansion, and digital transformation across every industry. Palantir Technologies has surged 368.32% over 1 year. That's not a typo. 368%. Shopify is up 105.35%. Broadcom has gained 96.18%. Micron Technology is up 89.27%. These aren't penny stocks or speculative plays. These are established companies with real revenue, real profits, and real growth. But here's what you need to understand about technology stocks. They're trading on future expectations. When interest rates rise, these stocks often face pressure because their valuations are based on discounting future cash flows. The higher the discount rate, the lower the present value. That's basic finance, so while technology stocks offer incredible growth potential, they also come with volatility. NVIDIA deserves special attention. This company has become the poster child for the AI revolution. They don't just make graphics cards for gamers anymore, they're powering the artificial intelligence infrastructure for every major tech company. Data centers are buying NVIDIA chips by the thousands, and the demand shows no signs of slowing down. The stock represents 7.28% of the S&P 500 alone. When Nvidia moves, the entire market feels it. Microsoft is another fascinating case. They've successfully transitioned from a legacy software company to a cloud computing and AI powerhouse. Their Azure cloud platform is growing rapidly. Their Copilot AI integration across products is generating new revenue streams. And they're maintaining their dominant position in enterprise software. Microsoft represents stability combined with growth, a rare combination in USA top stocks. Apple faces a different situation. While they remain the most valuable consumer electronics company on Earth, growth has slowed. They're no longer posting the explosive numbers of the past decade. But what they offer is brand loyalty, an ecosystem that locks in customers, and a services business that generates recurring revenue. For investors seeking less volatility with established market position, Apple provides exactly that. Now let's shift gears to financial stocks, because this sector is absolutely crushing it right now. And honestly, this might surprise you. When most people think about high-performing USA top stocks, they think technology. But financial stocks have been delivering exceptional returns with less volatility. Here's why. Rising interest rates actually benefit banks and financial institutions. When rates go up, banks can charge more for loans while potentially paying less on deposits. This spread expansion drives profitability. JP Morgan Chase, Goldman Sachs, and Bank of America have all reported strong earnings growth. The financial sector also benefits from economic growth driving loan demand and improved credit quality metrics. JP Morgan Chase alone has a market cap of $827 billion and generates $58 billion in annual net income. That's real money, real profits, real shareholder value. Financial stocks also tend to pay dividends, providing income while you wait for capital appreciation. For investors seeking balance in their portfolio of USA top stocks, financials offer compelling value. But it's not just the mega banks. Financial technology companies are disrupting traditional finance. Payment processors, digital lending platforms, and cryptocurrency-related financial services are creating new categories within the sector. These companies combine the stability of financial services with the growth potential of technology. It's the best of both worlds. Before we continue, I need to make sure you're still with me because we're about to cover healthcare stocks and some hidden opportunities that could be absolute game changers. But first, if you haven't subscribed yet, now's the time. We're building a community of smart investors who refuse to follow the herd, who demand clarity over confusion, who take control of their financial future. Click that subscribe button and join us. You won't regret it. Healthcare stocks offer something different from technology and financials: defensive characteristics. When markets get volatile, investors often rotate into healthcare because people always need medical care regardless of economic conditions. This defensive nature provides stability while offering growth from pharmaceutical innovation and demographic trends. McKesson Corporation is up 55.85% over 1 year. Cardinal Health gained 43.76%. Cencora jumped 58.1%. These aren't flashy technology companies making headlines every day, but they're delivering consistent returns by providing essential healthcare distribution services. The healthcare sector benefits from unstoppable trends. The global population is aging. Older people require more medical care. Healthcare spending as a percentage of GDP continues rising. Pharmaceutical companies are developing breakthrough treatments for diseases that were previously untreatable. Medical technology is advancing rapidly. All of these trends support long-term growth in healthcare USA top stocks. But let's talk about something most people completely miss: the hidden gems in specialty retail and niche sectors. While everyone chases the obvious plays, smart money finds value in overlooked areas. AutoZone, for example, is up 2.72%, which might not sound impressive until you realize it's a $68 billion company delivering steady growth in a mature market. O'Reilly Automotive gained 2.44% while maintaining an $87 billion market cap. These companies benefit from simple realities. Cars need parts. People maintain their vehicles. Economic uncertainty actually helps these businesses because consumers delay buying new cars and instead invest in maintaining existing vehicles. That's a recession-resistant business model hiding in plain sight. Now, let's address the elephant in the room: risk factors. Because if I only showed you the upside without discussing the risks, I wouldn't be doing my job. And Smart Money Sense is all about complete transparency. First, market concentration risk. When the top 10 stocks control 34% of the market, you're exposed to concentration risk. If these megacaps stumble, the entire market feels it. Diversification becomes crucial. Second, valuation risk. Many USA top stocks trade at premium valuations based on growth expectations. If growth disappoints or interest rates rise unexpectedly, valuations could compress quickly. Understanding what you're paying for growth is essential. Third, macroeconomic risks. Inflation, interest rate changes, trade policy, and global economic slowdown all impact stock performance. The Federal Reserve's decisions can move markets more than company earnings in the short term. Fourth, sector-specific risks. Technology stocks face regulatory scrutiny. Financial stocks are sensitive to economic cycles. Healthcare stocks navigate policy uncertainty. Every sector has unique risk factors you must understand. Market volatility in 2025 has been significant. The VIX reached 60.1 during April tariff announcements. While it has since normalized to 16.6, volatility can spike quickly. Understanding your risk tolerance and having a plan for market downturns is non-negotiable. So what's the investment strategy? Here's my framework, and remember, this is educational, not financial advice. Always consult with a qualified financial advisor before making investment decisions. First, build a core position in diversified, broad market index funds. This provides market exposure without concentration risk. The S&P 500 index gives you access to the entire U.S. market with one investment. Second, add selective individual stock positions in USA top stocks where you have conviction. Focus on companies with strong fundamentals, competitive advantages, and growth catalysts. Third, diversify across sectors. Don't put all your eggs in the technology basket. Include financials, healthcare, consumer staples, and industrials. Fourth, consider equal weight strategies to reduce mega-cap concentration. Equal weight S&P 500 indexes have outperformed during certain market environments. Fifth, implement dollar-cost averaging. Instead of trying to time the market, invest consistently over time. This reduces the impact of volatility and removes emotion from the equation. Sixth, maintain cash reserves for opportunities. When markets correct, having dry powder lets you buy quality USA top stocks at discounted prices. Looking ahead, several themes will drive USA top stocks in the coming months and years. Artificial intelligence will continue reshaping industries. Companies successfully leveraging AI will gain competitive advantages. Cloud computing adoption remains in early innings. Cybersecurity becomes increasingly critical. Clean energy transition creates massive investment opportunities. Healthcare innovation from gene therapy to personalized medicine will drive growth. Goldman Sachs projects the S&P 500 reaching 6,900 within 12 months, representing 11% upside from current levels. This projection assumes earlier Federal Reserve rate cuts, strong earnings fundamentals, continued AI investments, and reduced trade policy uncertainty. But projections are just projections. What matters is your personal strategy, your risk tolerance, and your financial goals. The best USA top stocks for you might be different from someone else depending on your unique situation. You've just gotten one step smarter about USA top stocks and American investing. But here's the thing, this is just the beginning. We've covered market analysis, sector breakdowns, specific stock opportunities, risk factors, and investment strategies. But there's so much more to explore. If you believe in making finance make sense, join our community by subscribing right now. Click that subscribe button so you never miss an insight. We release new videos every week covering stocks, investing strategies, market analysis, and financial clarity. Want to keep learning? Check out our complete playlist on stock market investing. We break down everything from beginner concepts to advanced strategies. The link is right here. And I want to hear from you. What USA top stocks are you investing in? What sectors are you most bullish on? What questions do you have about American stock investing? Leave a comment below with your biggest takeaway from this video. I read every comment and often create videos based on your questions. Remember, from Wall Street to your wallet, we're here to help you make smarter money decisions. This is Smart Money Sense. Keep building your financial knowledge. stay disciplined, and I'll see you in the next video.